everyone, and welcome to today's webinar. I am Gina, the Investor Relations Associate here at Birgo, and today we're going to discuss the Shaker Moreland Syndication. And with that, I'm going to hand it off to Andrew and Josh.
So yeah, thanks everyone so much for joining. Really appreciate it. Like Gina said, we've got Andrew Reichert here. Andrew is he's the founder and CEO of Birgo Capital. Andrew's got over 15 years of experience in real estate investing and operations. Before Birgo, he had experience in development, lending, and tech, and he brings all that to bear here at Birgo. And then myself, Josh Fisher, I'm one of the principals here. I head up acquisitions for Birgo, so I oversee all of the fund acquisitions for Birgo Capital, including deal sourcing, underwriting, negotiations, and diligence. I've successfully done that for over $300 million of investment real estate at this point, and I've got experience with negotiations, property analysis, and debt placement. And I'll hand it over to Andrew.
Thanks, Josh. Really excited that you guys are joining us today. We've got a really amazing deal to be talking to you about. The agenda for today is we're going to talk a little bit about Birgo Capital and our history with these types of deals. And then we'll talk specifically about Shaker Moreland and why we really think this is a world-class deal and a world-class asset in an incredible market. And speaking of the market, we'll talk about Cleveland and what we like about that market. And then we'll go through a few case studies, ways in which we've done this in the past, and how we've successfully kind of added value to these types of investments prior. And then we'll have plenty of time for Q&A at the end. Thanks to those of you that submitted questions in advance. Go ahead and submit questions as well in the chat, and we'll get to those in the Q&A section. So this is our legal disclaimer. Just as a heads up, this is a 506C Regulation D investment offering. So it is only open to accredited investors. If you're not an accredited investor, we're sorry, this is not the investment for you. And if you are accredited, we would love to have you be a part of this syndication. So let's talk a little bit about Birgo Capital. Well, first of all, our history. So Birgo Capital actually dates all the way back to 2012, over a decade old at this point. Our predecessor entity, Go Realty, was created to help investors get exposure to real estate without needing to be the actual landlords, without having to deal with the tenants in the toilets. And so that was coming out of my own experience investing in real estate. And in 2013, there was a predecessor boutique asset management firm created called Birchmere Advisors. And then in 2015, we fused those together to create Birgo Capital. So that's where the name Birgo comes from. It's the Birchmere and the Go Realty. We launched our first fund. We purchased about 800 units through that fund. And since then, we've been launching new funds and managing assets. Kind of every few years, we launch a new fund and we acquire another 800 to 1,000 units through each of those funds. And this year, we recently started doing individual asset syndications, which this is one of them. And we think this is really a great opportunity just based on our experience. We purchased over 3,000 units over the past decade. And this is one of those opportunities we really think is going to do well for the next few years. A little bit about our team. We've got a team of over 90 folks who manage all aspects of real estate operations. So everything from fund administration to the actual nuts and bolts of keeping properties running. We sort of are a vertically integrated firm, so we do everything from asset management to property management to keep the investment working well. And I talked a little bit about this, but we've acquired over $300 million of assets over the past decade, over 3,200 units, and we've generated about a 19% gross internal rate of return across all of our properties and funds that we've owned prior. So with that, Josh is going to tell us a little bit about what we like about the Shaker Moreland Apartments syndication.
Yeah, thanks, Andrew. Appreciate it. So here at Birgo, we talk a lot about acquiring stabilized but underutilized apartment buildings. It's one of the talking points that we always come back to and really the core of our acquisition criteria and what we do well. And with Shaker Moreland, that's exactly what we've got the opportunity to do here. We're acquiring Shaker from an aging generational owner who just really isn't that concerned that his property could and really should be generating a lot more cash than it currently is. The property's in Cleveland, but his heart's really in Florida at this point. So it's really a prime candidate that's squarely within our operational expertise and our acquisition criteria. So excited to dive into some particulars. So some quick deal highlights. We're acquiring the asset for right around $7.7 million. We're at 143 units. That's a price per unit of about $54,000 a unit. Great, really attractive basis. And we're projecting a net internal rate of return to our investors in this deal of 15.8%. So some details on the property. We have 2 assets, 5 buildings right across the street from each other, 143 units total. And Shaker Heights is really looked at as a strong and attractive submarket within the Cleveland area. And the properties take up just over 4.5 acres in the heart of Shaker Heights. So a nice chunk of real estate in a really great part of Cleveland. So what's the value proposition? So again, stabilized but underutilized. We're acquiring the asset from a retiring generational owner. There's a good bit of vacancy in place. Rents are well below market, and we have the opportunity to do an upgrade program and to lease up the units up to full market occupancy. How are we going to do that? Well, there's an opportunity for forced rent growth here, so we're not just looking at the submarket and projecting that things are organically going to grow. We have an opportunity to force rent growth. So we're going to be doing a renovation program within the units to bring the units up to a nicer level of finish. And we're going to be bringing rents up in line with what we're seeing in the market. There's really strong demand for solid B-plus apartment units in this area. We're looking at an average of a 33% per unit increase over a 2-year stabilization period. So really a lot of meat left on the bone from a rent standpoint. We also have an opportunity to roll out a utility reimbursement program. The existing landlord is billing back for some utilities, but not all. And we're looking at an opportunity to increase fee reimbursements by up to 81% with a utility reimbursement program. We're also bringing expansion experience to bear. This will be Birgo's 5th market that we've entered, and we're going to benefit from our experience breaking into other markets like Morgantown, Buffalo, and Cincinnati. We really have it down to a science at this point. And then lastly, we're partnering with a really experienced third-party property manager who has thousands of units that he manages both for his own portfolio and third-party, really deep market knowledge of Cleveland, and he really believes in the business plan. So he's got a great team, and we're excited to partner with that group on the property management side of things here. So how are we going to do that in terms of a building upgrade program? In terms of exteriors and common areas, we're planning to install new monument signage so that there's some great new branding whenever you first pull up to the outside of the property. We're going to be replacing some windows and some roofs throughout the hold period. We'll be installing a new parking lot. We're also going to be doing common area refreshes to give it really a new look and feel whenever you come into the entryway of the assets. So we'll be doing things like fresh paint, new lighting, and new flooring. And we'll also be replacing some exterior doors for them to be more welcoming as new residents are first approaching the asset. And then in the units, we're going to be doing a value add program that we're very familiar with. It's a program that we've done multiple times through multiple different assets and that our team really knows well. So we'll be doing fresh paint throughout the units. We'll be doing some kitchen and bathroom upgrades. Those are things that really matter to tenants and that give a unit a great new updated look and feel. We're going to be doing some more unique things like adding some breakfast bars to some units where there's an opportunity to do that, creating some more open space. We'll be upgrading countertops. We'll be installing new appliances where appropriate and new lighting in the units as well. So the units will really look and feel a lot fresher than they are now. So what about the property location? Well, like I mentioned, Shaker Heights is a really desirable submarket within Cleveland. We're just minutes away from 2 healthcare hubs, from high-end shopping, from 4 major universities. We're just minutes from the Cleveland Clinic. And from Case Western Reserve University. So we've got proximity to the meds and eds economic drivers that we really love at Birgo that are really sticky in kind of any economic climate and that we think are going to drive demand for newly updated apartment units. Really, there's a lack of similar assets, lack of available Class B product, and we think the close proximity is going to create a really strong appetite for those units. Shaker Heights is expected to continue growing from an asking rent standpoint year over year, but again, we're really focused on forced rent rent growth and rent appreciation here. So 1 and 2 bedrooms at the subject property are currently averaging $711 and $849 respectively. And post renovation, we're projecting an average of $925 for 1 bedrooms and $1125 for 2s, which again, we've done market research and we're working with a group from a property management standpoint who really knows the market well, and we feel really good about those rent targets. So we have an operating pro forma here for you guys to dig into whenever you take a look at the deck. I just call your attention to years 1 and 2 are really where we're planning to lease up, to add value, and to do those unit and exterior upgrades. So we're going to be driving top line in years 1 and 2 and tightening up expenses as well. So what I'd really call your attention to is the net operating income line. In year 1, we're expecting to be at about $435,000 in NOI. And then after we've completed the lease up and renovation program, we're expecting to be at over double here at $994,000 a year in terms of NOI. And then we're planning to exit after year 5 with a liquidity event. So rent roll and market rents, again, some specifics here, but there's a great unit mix. 45% of the units are 2 bedrooms, which we found to be very attractive in today's rental climate. And the punchline here is rents are greatly below market. Across the board, we're looking at an average increase in rent of 33%. From in place to where we believe market is today. So opportunity summary, again, we have some bullet points on the property. Currently, the property we would say is a Class C asset. We're going to be bringing it up firmly to a Class B plus with interior and exterior upgrades. Our debt structure, we have fixed rate non-recourse debt during the upgrade program. We have a really healthy loan program that's going to help us to finance some of those renovations. We're borrowing $7.75 million to finance both the acquisition and a good portion of the upgrades as well. So our loan to value going in is at 77%. Post stabilized loan to value, we're looking at 60%. And we do plan to refinance within the hold period after that 2-year upgrade program. So from an equity and return standpoint, we're looking at a gross IRR of 20% at the deal level and a net IRR for you folks of 15.8% with a 1.9 times net equity multiple, and we're assuming a 7% cap rate on the exit. And with that, I'm going to hand it to Andrew to talk about Cleveland as a market.
Thanks, Josh. So a couple things that we really like about Cleveland. Well, first of all, we have a particular type of market that we look for when we're trying to buy assets that we feel like match our thesis. And these are the types of markets that we've always invested in. So headquartered in Pittsburgh, we're typically looking for markets that have that same kind of a feel. A couple things that we really like are stable economic drivers. So, really backed by the meds and the eds. Of healthcare and higher education, multiple Fortune 500 and Fortune 1000 headquarters right there in Cleveland. We love that in terms of really strong employment base to really fuel the income of our residents. And you can see here it's home to 8 Fortune 500 companies. Many of these you've probably heard of. We think this is a great opportunity for us to plant ourselves right in a market that already has really stable economic drivers. Another thing we look for is just rental demand. So not just demand for the existing rents, but also an increase of rents. And we really love that Cleveland has seen a 6% year over year increase in rents and demand at this property and really in the surrounding areas as well. So those are some of the things we really like about Cleveland. In terms of some of the specific employers in the area, you can see not only this submarket that we're acquiring in, but Cleveland in general has some really major employers that are fueling the economy. As we mentioned, Cleveland Clinic is a huge powerhouse, Case Western Reserve University, but it also has some of these large national brands like Amazon and Ernst & Young fueling the economy as well, which we think are really important economic drivers. In terms of the demographics, you can review this on your own, but one of the things we like about Cleveland is it's just a very stable, steady market. population, sort of slowly increasing year over year. And we think that that's particularly true for this submarket. It's been really great opportunity and demographic, not just renting at the current rents, but as I mentioned, also renting as those rents have gone up. And just a little bit of background of how they've gone up over the past few years. This chart shows the asking rent per square foot over the past few years, and you can see it's really been slow and steady up and to the right. That's why we love investing in these markets. You don't have the huge boom that you might see in some of the coastal markets, but you also don't have the big bust that you often see in those coastal markets as well. Just buying right here in the heartland keeps everything steady with those stable economic drivers and slow and steady rent increases year over year. So Josh will fill you in on a little bit of some case studies, how we've been able to add value to our properties in the past.
Yeah, absolutely. Like Andrew said, we want to focus in on how we've been able to do this with some analogous properties that we feel like speak to what we're trying to do here in Shaker. So the first property that I'd want to talk about, it's called the Pinnacle Heights Apartments. This was a really similar owner that we acquired from. We acquired this asset in 2019. It was a seller who was looking to hang it up and move to Florida, just like is true in Shaker. It wasn't focused at all on driving rent growth or controlling expenses. So we were able to acquire the asset for $11.5 million in 2019. We programmatically raised rents across the board. And in 2022, we refinanced at an $18.6 million valuation. And that resulted in a deal level IRR of 44%. So really tremendous outcome here from an analogous seller with really an analogous top line business plan. Second case study, Skytop Village Apartments. This was in our backyard of Pittsburgh. This was 89 units that we purchased for $3 million in 2018. And the story here, it's really all about occupancy, and we benefited from some cap rate compression here as well. So again, similar story to Shaker from an occupancy standpoint. In place whenever we acquired this, it was about 72% occupied in a submarket that really had no reason for occupancy to be that low. So we drove occupancy up to 95%, and we sold the asset in 2021 for $4.6 million, resulting in an IRR of over 33% and an equity multiple of 2.3x. So again, driving that occupancy is something that we're well acquainted with and have a great track record of doing. And then last case study, this is Sylvan Ridge Apartments. This is a northern submarket of Pittsburgh. And the story here is really all about rent growth, expense reduction, and then also a really attractive basis. So we purchased 120 units for $5.5 million in 2017. Again, an older out-of-market owner who just wasn't focused on optimizing the asset because they didn't need to be. So we were able to acquire the property at a really attractive basis. We were able to both increase rents and reduce expenses to drive that net operating income growth. And in 2020, after holding for only 3 years, we were able to refinance at a value of over $8 million and to generate an IRR for the deal of just under 43%. So again, really a tremendous outcome with a pretty analogous business plan and seller story. So with that, we can jump into the Q&A portion of our webinar today. Gina is going to join us again. Gina, what questions have we gotten so far?
So Josh, first question is, what does Birgo really like about the Shaker Moreland Apartments?
Yeah, absolutely. So again, I would just point to the things that we talked about earlier in the webinar. We have a great low cost basis. We're buying this for $54,000 a unit in a really strong submarket. There's clear rent growth potential. We're not projecting things that are outside of our control. We're planning to go in with a business plan to force appreciation. We're not relying on market dynamics to do that. And then the last thing I would mention is actually how we sourced the property. This wasn't a widely marketed property that was blasted out. We leveraged relationships that we've built over a number of years with brokers that we've gotten to know, and they brought it to us because they knew that this was a Birgo deal, and because of that, we were able to acquire it at a really attractive basis.
All right. Awesome. Andrew, somebody asked if they're able to invest through an LLC, LP, or a trust.
Yeah, sure. I can take that one. Yeah, investors can invest through any preferred means. So you can invest as an individual or as an entity. So if it's an LLC or a trust or a partnership or even a self-directed IRA, really whichever vehicle you prefer, you can go ahead and invest either way.
All right, awesome. Josh, are there any tax benefits to investing in this syndication?
Yeah, great question. That's one of the things we love about investing in real estate. There are really tremendous tax advantages to investing in real estate in general. And also for this deal in particular, we'll be doing something called a cost segregation study, which basically just means that we'll be able to accelerate depreciation and to push paper losses through to our investors on their K1s to help offset other tax burdens that they have. So short answer is yes.
All right, awesome. And then how much equity is being syndicated and how much is Birgo retaining Andrew?
Yeah, I can take that one. So basically the total equity required is going to be right around 4.1 million. And the way that we're going to do that is we're going to have a $3.5 million offering through this syndication. And we'll be retaining as the sponsor right around $650,000. So that's what Birgo will retain ourselves, and we'll syndicate out the rest to our investors.
Okay. And then Josh, someone asked, what are the costs of the capital improvements that we're going to be doing?
Yeah, great question. Like I said, we're planning to spend outside and inside the property. Our total budget, right around $2.6 million for both interior and exterior improvement projects. And from a per unit standpoint, that comes out to right around $18,000 a unit, again, for exterior and interior renovations.
All right, awesome. And then Andrew, the last and most important, how can someone invest?
Yeah, thanks so much. Appreciate you asking. So best way to invest is to contact our investor relations team. So you can send an email to investorrelations@birgo.com. And we'll be happy to kind of walk you through the process of investing directly on our portal. It's pretty easy. You can send electronic funds directly through the portal from any bank account into the syndication. And we try to make it easy on you. That portal can also be used to monitor your investment over time.
All right, excellent. And with that wraps up today's webinar. We're excited that all of you decided to join us. If you have any additional questions or you're interested in investing in Shaker Moreland, please reach out to us at investorrelations@birgo.com.
Great. Thank you.
Thanks,
Thanks
everyone.
everyone.